If you've ever wondered how much a real beginner-friendly dividend portfolio can generate, you're in the right place. What's up, Effortless investors, and welcome back to the channel. In today's video, I'm breaking down exactly how much my £2,733 dividend portfolio paid me in April 2026. And more importantly, how it's growing month by month with small, consistent investments. Now, a quick reality check before we dive in. This isn't some perfect on paper YouTube experiment. This is my actual portfolio, built with my own money, investing month after month, just like many of you watching. So you'll see the wins, the slow progress, and yes, the occasional mistakes too. And just to be clear, nothing in this video is financial advice. It's simply me sharing my journey in a transparent way. A quick favor though before we get into the numbers. 74% of you watching aren't subscribed yet. If you're into realistic investing, small portfolios, and building income step by step, then hit that subscribe button. It genuinely helps the channel grow and keeps this series going. As always, time codes are in the description if you want to skip to a specific section. But why not pop the kettle on and enjoy the next 15 minutes? That's enough rambling though. Let's get into how April actually performed. So as it stands, the portfolio is now sitting at £2,733.98, which is a really nice step up from last month, because in April alone, the portfolio grew by 6.6%, which is £169.77 in added value. And what makes this interesting is that this basically cancels out what happened in March, where the portfolio was down 5.8%. So in a very real way, we've just seen how the market can drop and then recover just as quickly. It's a great example of why staying consistent and not panicking actually matters. In terms of what I've personally put in, total deposits now sit at £2,280, which means the portfolio is currently up £453 overall, or 19.8%. That 19.8% is split between 13.85% in realized gains from the sale of various assets and 5.95% in current unrealized gains. Now, if we zoom out a bit and look at the performance over time, and I'll throw a graph up on screen here, you can see how things have progressed year by year. Back in 2024, the portfolio was up 21.30%, which was a very strong start. In 2025, that slowed down to 8.84%, still solid, but more realistic. And so far in 2026, we're sitting at 2.2%. And I think this is where things get really interesting. I'll also put a monthly heat map on screen for you because it shows something that you don't always see on investing channels. Not every month is green. You get reds, you get greens, and sometimes you get months like March and April where they completely balance each other out. That's what a real, small portfolio actually looks like over time. A bit messy, a bit unpredictable, but trending in the right direction if you stay consistent. One caveat though, June 2024 is a bit of an outlier, as that loss is solely due to my own impatience and misunderstanding at the time. I'll pop a link in the description to a video that explains what went wrong for me there. Next up, let's take a look at the progress versus the goal. And just to be clear, this is comparing actual growth to projected growth, not how close we are to the final target amount. So right now, the portfolio sits at £2,733, and based on my actual performance, I'm up £453 overall, which is a 19.8% gain. Now if we compare that to the projection, which is based on starting with £100 and adding £100 every single month thereafter, the portfolio would be expected to sit at around £2,465 with a gain of roughly £196 or 7.5%. So when you put those side by side, the portfolio is currently performing well ahead of the projected growth rate. And this is why I like tracking it this way. It gives a bit of context, not just is the number going up, but how is it going up compared to a simple, consistent investing plan. Of course, this won't always be the case. Some months will pull this closer together or even below projection, but over time, it's a really useful way to measure whether the strategy is actually building value beyond just contributions. Now, building on that, let's look at what actually changed inside the portfolio this month. In terms of activity, nothing was sold in April, which keeps things nice and simple and very much in line with the long-term approach here. On the buying side though, I did continue adding to positions across the portfolio, and I'll throw a table up on screen now so you can see this clearly. Overall, a pretty consistent spread of buys across both the income side and growth side of the portfolio. Nothing too flashy, no big swings, just steady contributions and building positions over time, which is really the core of this whole strategy. Now, off the back of those buys, let's zoom in on the EI growth side of the portfolio and see how that's actually performing. So the EI growth pie is now sitting at a value of £1,852, and in April it grew by a solid 7.9%. Overall though, it's up 8.77%. Just a quick note here, that overall number did take a bit of a reset because I reshuffled this part of the portfolio at the beginning of March. So the performance you're seeing now is really a more recent reflection of how its updated allocation is doing. Breaking it down into the individual positions, starting with VWRL, which is the backbone of this section. That's now sitting at £1,490. It was up 7.73% in April, and overall, it's gained 12.54%. This is pretty much doing exactly what you'd expect. Steady, broad market exposure, and it's been carrying a lot of the growth here. Then we've got WLDS, currently at £274. That grew 6.24% this month, but is still slightly down overall at 0.5%. So this is one of those positions where you're starting to see some recovery, but it hasn't fully climbed out of the red yet. And finally, SGLN, sitting at just £83. This one was actually down 2.2% in April and is down 15.75% overall. So this has been a bit of a drag on the growth side, but at the same time, it's serving its purpose as a hedge. When markets are strong, you'd expect something like this to lag, so it's not entirely surprising. Overall, the growth side had a strong month, largely driven by the broader market rebound, and I think this mix really shows the balance. You've got your core index doing the heavy lifting, a more speculative position trying to catch up, and a defensive asset that moves differently to everything else. Now, alongside the growth pie, let's take a look at the EI income pie, which is where the dividend side of the portfolio lives. So right now, the EI income pie is sitting at £691, and in April, it grew by 3.6%, with an overall gain of 3.87%. And just like the growth side, this section was also reshuffled at the beginning of March, so these overall numbers are still relatively fresh and reflect the updated allocation. Breaking it down, starting with JEQP, currently at £172, this was actually one of the stronger performers this month, up 6.87% and sitting at 1.6% overall now. A nice bit of momentum here. Then we've got VHYL at £173, up 1.84% in April and 12.5% overall. This has been one of the more consistent performers across the income side, combining both yield and solid price appreciation. Next is JEIP sitting at £134. This one was fairly flat in April at just a gain of 0.21% and is currently down 1.28% overall. So not doing anything too dramatic, it's just kind of ticking along in the background. INFR comes in at £109 and this was actually down 0.88% this month, but still up 6.34% overall. So despite a slight pullback in April, it's still holding up well over the long term. And finally, IUKD sitting at just over £100 and up 2.55% in April, but still down 1.04% overall. Again, similar story to JEIP, a bit of short-term movement, but still finding its footing overall. So across the board, the income side had a positive but more modest month compared to the growth pie, which is pretty typical. You're generally trading a bit of growth for more stability and income here. And that balance is really the key. This side of the portfolio isn't about big swings, it's about building a steady, reliable income stream over time while still getting some level of capital appreciation. Now, outside of the main growth and income pies, I've also got a couple of individual positions, and the first one is Ondas. So, Ondas is currently sitting at just over £100, and it actually had a very strong April, up 15.34%. But, and this is where a bit of perspective is important, it's still down 20.4% overall. So what we're seeing here is a bit of a rebound after a pretty rough period. And this is exactly the nature of these smaller, more speculative positions. They can move quickly in both directions. A plus 15% month looks great on the surface, but when you zoom out, it really just starts to recover some of those earlier losses. So for me, this sits firmly in that higher risk, higher volatility part of the portfolio. It's not something I'm relying on for stability or income. It's more of a long-term, let's see how this plays out type of position. And months like this are a good reminder of both sides of that coin. The upside potential is there, but so is the volatility. Now, even more on the speculative side, we've got Rigetti Computing. So Rigetti is currently sitting at just over £18, and in April it actually jumped 23.26%, which on paper looks like a huge move. Overall, it is up a nice 80.86%. At this point, this is very much a small, experimental position in the portfolio. It's not something that's going to move the needle much in terms of total value, but it does give exposure to a more cutting-edge space. And realistically, with something like this, it's a long-term watch. High risk, high uncertainty, and if it works out, great. But if not, it's kept at a size where it won't derail the overall portfolio. Now, shifting away from portfolio performance and volatility, let's get into the part that ties everything together, the dividends. So for April 2026, the projected dividend income was £6.95, and the actual figure came in just slightly under that at £6.78. So very close, but just missing that projection by a small margin this month. Breaking down who actually paid what, we have SMIF contributing 39p, JEIP paying 63p, VHYL coming in at 82p, and JEQP adding £1.14. And then the standout again this month, VWRL, which paid £3.80, making it the largest single dividend payment in the portfolio to date. Now, I'll put a graph on screen here because this is where things get really interesting. Comparing April 2025 to April 2026. Last year, dividends came in at just £1.52. And this year that's grown to £6.78. So even though the portfolio is still relatively small, you can already see a very clear upward trend in income generation. Following that, I'll show another graph comparing actual versus projected dividends for each month in 2026 so far. And what's interesting here is that January, February and March all managed to beat their projections, while April just narrowly missed its target of £6.95. So overall, it's still tracking very closely to expectations, but with a slight reminder that dividends don't move in a perfect straight line month to month. Now, zooming out from dividends and looking at the extremes of performances this month, let's break down the best and worst performing assets in the portfolio, starting with the best performer. And this might be a big surprise given the size of the position. It's actually Rigetti Computing. Despite being a very small holding, it posted a strong 23.26% gain in April, making it the standout performer in percentage terms this month. But if Rigetti has taught us anything, it's just how volatile and fast moving these kinds of positions can be. On the other side, the weakest performer this month was SGLN, which fell by 2.2%. Now in the context of the whole portfolio, that's not a massive drop, but it does highlight the defensive nature of this asset. It tends to behave differently to the rest of the portfolio, often lagging when equities are strong, which is exactly what we've seen in April. So overall, this month really showed a clear split. High volatility on the speculative side driving the biggest gains, and more defensive assets slightly lagging during a strong market rebound. So that brings us to the end of the breakdown for April 2026. And as always, it's a mix of strong rebounds, a few laggards, and a steady flow of dividend income building up over time. If anything, this month really highlights what this portfolio is trying to do. Stay consistent, keep investing through the ups and downs, and slowly build both capital growth and income without trying to time anything perfectly. If you've made it this far, you're clearly interested in this kind of realistic, beginner-friendly investing journey, so consider subscribing. I'm documenting this portfolio month by month, showing exactly what works, what doesn't, and how a small investor can actually build something over time. It's still a very small channel, but that's exactly the stage where consistency matters most. And if you want to go a step further, I definitely recommend checking out my video, I asked investors, AI and data, what is the best UK dividend stock? It dives into how different perspectives compare when picking income stocks, and it fits really well with what we're doing here in the dividend side of the portfolio. But for now, that's everything for April. As always, thanks for watching, keep it simple, realistic and effortless, and I'll see you in the next video.